to another day of Tesla Shorts Time, episode 546. I'm Patrick in Vancouver. Today is July 19th, 2026. There's a lot to cover in Tesla land today. Tesla's LFP batteries retained 93.34% capacity after 62,000 miles, beating nickel packs and shifting long-term ownership math. Tesla delivered 838,149 vehicles through June. That figure edges past Mercedes-Benz, which reported 837,200 sales over the same period. The narrow lead arrives ahead of the July 22nd earnings call. Mixed demand signals in several markets continue to frame the volume discussion. The half-year benchmark provides a concrete reference point for near-term margin context without resolving broader questions. From overall vehicle sales, we can turn to durability data that could influence long-term ownership costs. A study tracked a CAT ATL LFP Model 3 retaining 93.34% capacity after 62,000 miles. Nickel-based packs in the same comparison showed faster fade. The result strengthens the case for LFP in high mileage and energy storage roles. Larger fleet samples now entering the same mileage band will supply the next data point. The finding aligns with ongoing questions around chemistry durability that supports longer ownership cycles. Tesla posted confirmation that FSD withdrawal is a real feature. The move lets the system step back when driver input indicates discomfort. It builds on supervised FSD's ongoing V12 to V14 progression, without yet touching unsupervised regulatory gates. Watch for how the feature logs interventions to refine future releases. The post came directly from the official Tesla account on X. Observers noted the change could improve driver trust during the supervised phase. Battery durability points ahead to energy products, where a new European storage deal was just signed. Nat Power and Tesla formalized a deal to deploy megapack scale storage across Europe. The partnership targets utility and commercial sites where grid services revenue is growing. It extends Tesla Energy's non-auto margin engine into new markets without new factory announcements. Follow-on orders will test whether megapack production capacity can keep pace with demand. This development adds a named European partner that could accelerate backlog conversion in the tracked deployment arc. Energy storage leads naturally into charging infrastructure for the Semi. Tesla opened its first public megacharger site dedicated to semi-trucks. The station supports the higher power needs of the electric semi-fleet now expanding beyond early customers. It directly addresses real-world total cost of ownership versus diesel on longer routes. Utilization data from this site will inform the next wave of corridor builds. The launch fits the ongoing supercharger and semi-network expansion tracked in recent episodes. Semi-charging connects to the broader supercharger network updates. Local planners approved Tesla's supercharger hub at Phoenix Retail Park in Paisley. The site adds density to the Scottish network at a retail location with existing traffic. It fits the tracked supercharger expansion arc without altering open access economics. Construction timelines will determine when the stalls come online. The approval continues the pattern of incremental European site additions. Network growth sets up competitive positioning in the premium SUV segment. A comparison pits the new Porsche Macan Electric, GTS, and Audi SQ6 e-tron directly against the Model Y. The test focuses on performance, pricing, and interior differences in the premium electric SUV segment. It highlights where Tesla's software and charging networks still set the pace. Sales data after the rivals reach showrooms will show whether the gap narrows. The head-to-head arrives as Model Y continues to face refreshed competitors in multiple markets. From head-to-head tests, we can move to real-world rental and owner feedback. Hertz's Model 3 fleet is being evaluated for how it handles typical rental patterns. The piece examines charging logistics and range in mixed urban and highway use. Real-world feedback from renters will feed back into Tesla's fleet service positioning. Broader rental adoption remains gated by utilization economics. The review supplies one more data point on how current Model 3 hardware performs under high turnover conditions. A driver tested a current Model 3 against his existing vehicle and reached a firm verdict on daily usability. The review centers on ride quality, interface, and charging convenience in 2026 conditions. It adds one more data point to owner switch stories now circulating. Aggregate trends from similar tests will surface in resale and referral data. The conclusion reflects real-world experience with the refreshed Model 3 hardware and software stack. The test was documented on supercarblondie.com. Owner energy discussions lead into the dedicated first principles segment. An owner calculated potential annual savings from adding a second Powerwall under local rate structures. The discussion centers on payback periods versus incremental hardware cost. Fellow owners in the thread supplied real bill data that tempered the initial projection. The exchange shows how virtual power plant programs are still maturing market by market. This thread continues the tracked residential storage conversation by surfacing concrete, rate-specific math. The opportunity was valued at roughly $440 per year. An owner asked whether the system should reserve Powerwall capacity for home loads before allowing vehicle charging. Responses detailed current software behavior and workarounds. The thread reveals how owners are actively tuning energy priorities as more households add both Powerwall and EVs. Tesla's next app update could formalize some of these preferences. The conversation maps directly onto the tracked Powerwall and virtual power plant scaling questions. Multiple participants shared screenshots of their inverter settings. A Powerwall installation reached its 5 kilowatts export limit, forcing the solar array to curtail output. The owner documented the interaction between inverter settings and utility rules. The case illustrates how grid export constraints can reduce the effective value of paired solar plus storage systems. Larger installs will face the same cap unless local rules change. This example provides a concrete illustration of the export limit tension explored in the first principles section below. The curtailment occurred on a clear day with full array output available. Export limits on residential batteries create a direct tension between hardware capacity and realized revenue. When a Powerwall is caped at 5 kilowatts of export, excess solar production must be curtailed even on the sunniest days. The constraint is not a flaw in the battery chemistry or inverter design. It is a grid rule boundary that varies by utility and region. Owners facing this cap see their incremental hardware investment deliver less than the headline payback math suggests. Tesla's approach of pairing Powerwall with solar and virtual power plant programs assumes owners can monetize stored energy through export or time-of-use arbitrage. In markets where export caps bind early, that assumption weakens and the incremental value of a second or third Powerwall shrinks. Owners in the affected threads are already adjusting charge and discharge schedules manually. The software layer can mitigate some of the shortfall, yet it cannot override the physical export ceiling set by the utility interconnection agreement. The practical implication is that Tesla Energy's residential margin story now depends as much on regulatory and utility engagement as on cell cost curves. Watching whether Tesla negotiates higher export allowances or introduces software that prioritizes local loads will reveal how durable the current residential storage economics actually are. There is a challenge worth discussing on the investment side. A column argues that another growth name offers stronger compounding potential even at Tesla's current valuation. It frames the choice around relative earnings trajectories rather than absolute price levels. Tesla's upcoming earnings will need to address whether robotaxi and energy margins can close that perceived gap. The piece highlights how investors are weighing non-vehicle growth against the company's valuation multiple ahead of the July 22nd report. A second early Model S signature has surfaced on the market at $500,000. The listing underscores how low VIN collector examples continue to command premiums years after production. Buyers appear willing to pay for provenance rather than driving dynamics alone. The car joins a small set of preserved early units that still draw attention on secondary markets. The post appeared on X via Teslarati. A low-mileage 2011 Roadster Sport is listed for sale. one of the earliest production examples still on the road. The car represents the starting point of Tesla's vehicle lineage before any mass-market models existed. Collectors continue to track these original units as the fleet ages. The listing preserves a direct link to the company's first vehicle platform. Details were reported through Google News aggregation. Owners are sharing visualizations of roads dense with cybercabs once unsupervised operation arrives. The posts reflect ongoing anticipation for the shift from supervised FSD to fleet-scale deployment. Regulatory timelines remain the gating factor. A short clip highlights subtle FSD behaviors that reduce driver stress on routine drives. The video focuses on gap management and lane positioning rather than dramatic maneuvers. It adds to the steady stream of owner footage documenting incremental comfort gains. A Tesla Semi was photographed on public roads in Illinois. The sighting suggests early fleet customers are already moving units into broader logistics networks. Mileage and duty cycle data from these trucks will feed the next round of total cost of ownership analysis. Before we go, keep an eye on utilization numbers from the new Megacharger site and how they shape the next corridor announcements. That's your Tesla news for today. TSLA closed at $380.84, down $10.22, 2.6%. If you found this useful, a rating or review on Apple Podcast or Spotify really helps new listeners find the show. You can also find us on X at Tesla Shorts Time. I'm Patrick in Vancouver. Thanks for listening, and I'll see you tomorrow. And before you go, this show is part of the Nara Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen, OmniView, a balanced daily world news briefing that takes every side seriously. Find every show free at naranetwork.com. And on the website, every episode's visuals live in our free image gallery at naranetwork.com/gallery. Royalty-free under Creative Commons, download with attribution. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.